Cbus manages around $28 billion in superannuation savings for members. Of this, nearly $2.8 billion is invested in property assets. The growth Cbus MySuper investment option, which is where most members are invested, currently targets a 12.5% allocation to property. With us here today is Grant Harrison, Cbus Investment Manager Private Markets, to talk us through how Cbus invests in property. Welcome, Grant.
Thanks, Daniela.
Grant, how does Cbus invest in property?
Daniela, Cbus invests in more than 170 properties around Australia. We invest in property directly through Cbus Property and indirectly through unlisted pool funds, which include both core and development properties. Cbus Property develops and manages around 50% of our property assets, and the remainder, and equally important, is in unlisted pooled funds, which, as the name suggests, are investments pooled together for like-minded investors who have a similar long-term objective. The majority of our property investments are domestic, i.e. in Australia. However, our strategy also allows for exposure in key offshore markets such as the US.
Grant, you mentioned core and development properties. Can you tell us more about this?
Yes, our property assets broadly fall into one of two categories, core or development. Core property is relatively low risk and is already built and tenanted, aiming to provide a stable income. Most of our core property holdings are in pooled funds managed by ISPT and AMP, which have longer term, lower risk strategies. Development property, on the other hand, is relatively higher risk as it is exposed to construction, leasing and sales risk. Our development property holdings mostly sit in the Cbus Property portfolio.
Grant, what types of property does Cbus invest in?
Daniela, our pooled funds invest across a number of property sectors, including office, retail and industrial. And this includes numerous prime office buildings across Australia, such as Castleton in the Melbourne CBD and 363 George Street in the Sydney CBD, to name a few. Our retail holdings range from regional shopping centres down to even smaller scale neighbourhood centres.
Grant, what are the benefits of investing in property assets?
Daniela, investing in property provides a return in the form of rental income and capital growth. A significant portion of the return is derived from rental income secured from leases with stable tenants, which is good because the rental provides a steady cash flow that generally keeps pace with inflation. Over the longer term, capital growth, i.e. increase in the value, is driven by the scarcity value of the underlying land, the quality of the building and the rental income generated. Property also provides an additional benefit of diversification across the overall Cbus fund.
What sort of return is Cbus aiming for from its property investments?
The expected return from property investments is around 8.5% per annum on average over the long term after investment fees and tax. And of this we expect to receive a return of around 6.5% per annum from income and around 2% per annum from capital growth.
And finally, how has the growth Cbus MySuper option performed over the financial year to date?
The financial year to 31 October covers a fairly short period of 4 months, but over this time the growth option has returned 3.2%, and over the 12 months to 31 October the growth option returned 9.7%.
Thanks, Grant.
Thank you.